Hello and welcome to the Capital Markets. I'm Edidiong Iwang. Now let's see some of the stories in the news. Well, brewing giant International Breweries this week notified the Nigerian Stock Exchange that its shareholders have approved a rights issue proposed by the board and authorized the directors to take all steps required to handle the resolutions as approved. The announcement came after an extraordinary general meeting of the company held on October the 15th. The approval is followed by a discussion of the board of directors, which shows an approval of the rights issue price at 9 naira per share. More details on the exercise are expected to be provided in due course. Now, Tier 2 lender Union Bank of Nigeria has listed its 30 billion naira 10-year bond on the NSE. The 16.20% subordinated unsecured fixed-rate Series 3 bonds is part of the $100 billion debt issuance program and is due in 2029. Details of the bond show that coupons will be paid on June the 27th and December the 27th of each year up to the maturity date. The delay in convening Union Deconsult annual meeting within the regulatory date has been attributed to the firm's invitation by the Financial Reporting Council of Nigeria. In a notice to the Nigerian Stock Exchange, the consumer goods company underscores the qualification of its 2018 financial statement by the external auditors as the rationale for FRC's invitation. While clarifications have been made, the company notes that the compliance processes are ongoing as the annual meeting date will be communicated upon completion. Now, turning our focus now to earnings, Tier 1 lender GT Bank released its 9-month financial results, showing the bank's group gross earnings was lower by 3.10% compared to the same period last year at 324.26 billion naira. On the other hand, the group's pre-tax profit jumped by 3.90% to 170.65 billion naira. After-tax profit surged by 3.90%, while its earnings per share rose to 5 naira 15 kobo, up from 4 naira 36 kobo reported in September. Away from company news now, the Association of Securities Dealing Houses of Nigeria wants President Muhammadu Buhari's economic advisory team to escalate issues confronting traders in the capital market in order to revamp the confidence of investors in the equities market. The president of the association, Patrick Ezeagu, tells Channels Television's business producer, Templar Shaju, that one of the main concerns of investors is the issue of value-added taxes on capital market transactions. Let's take a listen.
We decided today to come to the market because we have an event tomorrow, which has to do with our annual general meeting. And this is a process of coming to sensitize the brokers about that particular AGM. But more importantly, to equally appreciate the exchange, the whole of the executive of the exchange, for the wonderful work they have been doing in sustaining this platform from 1961, when it's formed, to today. We have gone through thick and thin, but somehow they have been able to manage to sustain the market. And so when we appreciate somebody for what he has done, then it gives him the courage to be able to, continue in that direction. And equally to showcase the fact that we are a branding, because we have moved from being just senior stockbroking houses of Nigeria, senior security dealing houses, because we want to broaden our base and our income streams. We want the brokers to be able to operate in all the platforms, both the equities, the fixed income, and commodities, both the quoted and unquoted stocks. So at least we'll be able to broaden the base of the earning capacity of brokers in the market. And then beyond that, we're actually doing much more than that. We're going for a Pan-African body, which is known as the Association of Stockbrokers and Security Dealing Firms of Africa. In fact, the next Asia conference that is going to happen in Botswana, the MOU that will bring that body to life will be signed. We'll be having discussions. And so these are the things that are leading to the reason why we have to come here. Because by the time you sensitize the brokers as to what is happening, they should be able to come to the AGM for the complete story. That's why we're here.
So you're also having other markets or other platforms that you have under the Nigerian capital market.
Yes, that's correct.
Also not resting on your oars by broadening their space. I'm talking about the FMDQ, which is
Yes.
also launching Equities.
That's
Now
correct.
that you're also broadening your horizon, what are the preparations for the broader space
Yeah.
of these markets?
First, you have to do capital, capacity building for people who actually operate as brokers, where they have an understanding with the capital market capacity builder, which is the CIS. And they have started rolling a lot of training programs, which is being attended by brokers to ensure that at least they are up to date with what is happening in the market, be able to key into the various products that are want to introduce into the market. So beyond that, even the Lagos Community of Futures Exchange equally had a program, I think about one or two, that's geared towards ensuring that at least brokers understand how to trade on that platform. And FMDQ too, are partnering with FMDQ in terms of trading and capacity building. So all that is being put together to ensure at least that the brokers who are going to trade on these platforms understand the system, understand the products as well.
Are there plans to make this new world of securities dealing compulsory for those that have been limited to stockbroking before?
In fact, the business imperative directs that at least you shouldn't be just a stockbroker. Be able to operate within the capital market space. In fact, there is a CFA program that ensures that at least you're able to understand the whole broad spectrum of the capital market, be able to play. That doesn't mean that people can't specialize if they wish to, but it's important at least you're able to know something about each of the products and each of the markets for you to be able to operate in this market.
So in recent time, we've seen the market fall into new lows. The high cap, the mid cap stocks have also hit the floors lately. What are your thoughts on this as a major figure in the market?
Well, the market doesn't exist in isolation. I hope you realize that. It has to do with the total market. In fact, the exchange itself is a barometer for the welfare of the market, the way the market is, the economy is currently. And so, yes, our economy has been down. And not only in our economy, the world economy is equally going through some, stress up and down. And that is reflected in the market. But I believe it's not going to last for too long. What we need to do is to tweak our economic policies. And once we have done that, and I believe that the government is listening to, if you look at the fact that they have to now appoint an economic advisory team that is going to report directly to the president, not through the vice president, it means that the government has thought that this is very, very important for them to tweak the economic policy so that they will be able to now operate the economy. And once that happens, you will see eventually that the market will rebound.
In respect of the state of the capital market, equities, bonds, fixed income generally, what would you want to see from this economic advisory team of the president?
The most important is for them to look at the various aspects of the economy. Let's take something like the issue of taxation. You remember that we've been enjoying some waivers in terms of VAT. I think that waiver should sustain because the reason that brought about that waiver had not really disappeared from the market. Two, I think that there's overemphasis on monetary policies at the detriment of the capital market. Because if you look at it, what really sustains an economy? It is the capital market, because that's where you will find long-tenured funds with which you can finance infrastructure and other, business of government, instead of going for short terms, like going to the bank to borrow money and the rest of them. But I believe that it is important that the government sees the capital market as a partner in progress and ensure that most of the infrastructural development, which actually eventually catapults into the issue of job creation and the rest of them, is sourced through the capital market, because that's where you're going to get the kind of fund that won't give you the kind of hiccups that short-term funds do give you.
So last week, Friday, the pricing rule for stocks, pricing methodology for equities actually became enforced in the capital market, in the stock market precisely. It means that you now have to do trading of 100,000 units before you can have a change in price. What's the implication of that for stocks and generally for the market and investors?
It will appear that some people are abusing the market by using small quantities to really, change the prices and the value that people have in the market. And we looked at this and said, what is the problem? And we looked at it and found out that actually some people are really using small quantities to change the structure of the market. And we said, instead of allowing that to continue, you saw the downward trend that had continued the whole of October, more or less. We said, then look at the reason behind that. And when we found out the reason, we decided to tweak the market structure to ensure at least that there will be stability. And if you look at it, it merely happened. You saw the way the market behaved. And we believe it's going to continue once people understand it and get stabilized about it.
So it's generally a welcome development.
It is very, very welcome at this point in time.
Well, speaking of revamping confidence in the equities market, amid continued investor apathy and a lack of positive catalysts, the NSE continued to nosedive with the all-share index declining to a 52-week low by 0.4% to 26,448.62. Consequently, the month-to-date and year-to-date return worsened to minus 4.3% and minus 15.9%. Meanwhile, a total turnover of 896.61 million shares worth 16.56 billion naira in 12,638 deals were traded by investors this week on the floor of the exchange, and that's in contrast to a total of 1.40 billion shares valued at 31.95 billion naira that exchanged hands last week. Analyzing by sectors, sustained sell-offs across Tier 1 banks dragged the banking index to a 2.0% loss, industrial goods shed 0.3%, and oil and gas lost 0.2%. On the flip side, the insurance index resumed its upward trend to end the week positive by 2.4%, while the consumer goods gained 0.1%. Well, analysts believe the trend witnessed through the year is likely to persist through the final quarter of the year, but expect pockets of gains over the final month of the year as fund and portfolio managers realign portfolios before the year begins. Or moving to the NASD securities markets, the index and market capitalization closed the trading week on Friday on a negative note by 2.75% to close the week at 693.58 points and 498.29 billion naira respectively. In all, a total of 1.32 million units valued at 195.77 million naira were exchanged in 51 deals. Negotiations focused on 10 out of the 39 securities admitted to trade on the NASD OTC market. Now moving to the fixed income side of the market, trading in treasury bonds was bullish as the average yields were lower by 13 basis points to settle at 13.9%. Now there were yield declines recorded across the market except on 5 instruments, where analysts expect sell-offs in the secondary market as investors look to take positions in the primary market auction. In all, on Friday, there were 47 deals valued at 11.60 billion naira. Well, similarly, activities in the Treasury bills market were seemingly bullish as the average yield across instruments pared by 17 basis points to 12.4% as investors took position in the market amid relatively buoyant liquidity. Now, during the week, the CBN gave banks a directive to cease sales to clients with outstanding loans with any bank, as well as corporates which are benefiting from CBN intervention funds. In all, a total of 403 deals were traded and they were valued at 211.12 billion naira. Now we'll just look over some of the stories in the news. Tier 2 lender Union Bank of Nigeria has listed its 30 billion naira 10-year bond on the NSE. Now the 16.20% subordinated unsecured fixed rate Series 3 bonds is part of the 100 billion naira debt issuance program and is due in 2020. Well, details of the bond show that the coupon will be paid on June the 27th and December the 27th of each year up to the maturity date. Well, we'll take a quick break now. When we return, we'll give details on the Nigerian Stock Exchange's inaugural edition of X-Cathon. Well, thank you for staying with us. The Nigerian Stock Exchange has commenced the inaugural edition of X-Cathon, its hackathon and idea innovation contest designed to improve millennial participation in the Nigerian capital market. Well, our business producer, Temple Ashadri, speaks with the head enterprise innovation hub of the NSE, John Nsikak, and he sheds more light on the X-Cathon.
we hope to work with them to actually execute, because the desired outcome is to see that we have more participation, especially from young people in our market. We want to deepen the market. So we'll work with them to make sure that happens. And that goes just beyond the idea. So we'll either incubate or accelerate them, because we have an innovation hub here. So incubate or accelerate based on their stage of development as a venture.
And how are you drawing the participants?
Well, it was open, right? So everybody had the opportunity to apply. What we just advised was that for you to be trying to solve a problem in the capital market, you need to understand the way the capital market works. All right? So it was open, and right now we have a lot of entries, and we're drilling down to the final 10 for next week, for the demo day.
Any particular timeline, dates we're looking at to have an event to surround this presentation of prizes to the winners eventually?
Yes, of course. 24th, next week, Thursday, 10 a.m. here at the event center. Yes, that's the demo day.
What's the number of participants they have now, candidates?
Total entries?
Yes, total entries.
Over 100.
Okay.
And we are drilling down to 10 for the demo day, the top 10. And listening to, just drilling down based on our parameters, very exciting, very creative, a lot of creativity coming from Nigerians, especially the young people, Nigerians, young people.
What for you will be the solution that FinTech will be bringing for the retail participants or retail investors in the market if we're able to have, or this, let's say, post-X-Carton now?
Well, what you want to see is numbers, right? Right now, the numbers are not very good from the retail side of things, retail participants. What you see, we want to see a quantum leap in those numbers. And so whatever FinTech can deliver that to us, we're happy to exploit and work with them to make it happen.
Can you give us an insight into some of the models that have been developed so far? What kind of solutions have these candidates come up with?
Well, some people are talking about education, right? I don't want to give out too much because the competition is next week. So some people are talking about education, in terms of making the consumers, investors, understand the capital market a bit more. Some people are talking about ease of consumption of services in terms of making it seamless to onboard investors. And some guys are talking about gaming, introduce some elements of gaming, gamification, and making it more exciting. And FinTechs, the way they work is to focus on the consumer. So what we are seeing is a lot of focus on the consumer and being flexible enough to deliver what they want to them.
So, but basically, this will be tailored towards retail part of the market, not necessarily the institutional investors.
No, retail. So the theme of our hackathon is millennial participation in the capital markets.
Oh, great.
Yes, and that's retail, young people, and all of that.
But over the years, it doesn't look like millennials have shown any keen interest in the market.
Well, yes, that's what we see.
So how bullish are you on this particular project?
We're going to change that narrative. We're going to change it. That's why we are leveraging FinTech, because millennials are consuming, products or services of different platforms. So it's just to deliver it to them the way they love it. And once you deliver it like that, they're sure to consume it. The banking, for instance, has a B2C leg, direct B2C leg. But the capital market is not exactly like that. We are B to B2C. So we are the exchange, there are brokers, and then before you get to the consumers. So that makes it a bit difficult for FinTechs to really hit the capital markets. We are changing that narrative, and we are seeing a lot of improvements already.
Okay, so I asked earlier about USSD and, of course, apps developments and all of that. But if you look at the banking space, the USSD era seems to have been reducing in a way because of the charges around that. It looks like the FinTechs are beginning to embrace more of apps. How will this be squared up in the capital market space eventually, around stocks and perhaps bonds and treasuries?
Apps, web channels, USSD, those are just channels. So depending on who you are targeting, you choose the channel you want to reach them. USSD works because smartphone penetration in our market in Nigeria is about 30%. So about 80 million Nigerians now have smartphones. And so if you are offering something to them over apps, you are cutting them out. That's why USSD becomes compelling. But some people have argued, why do you want to go down to their level? Why don't you let them come up, upgrade in terms of having smartphones so they can consume the services? For us, we don't want to put so much pressure on the consumer. right? We would like to meet them where they are. So we deploy all the channels, apps, web, USSD, and let everybody come in.
The controversy around who pays for USSD session between you as an exchange and, of course, the telcos will then emerge.
Of course, those questions will always be there. Telcos will get money for their sessions anyway, whether it's coming from the consumer or from the business, right? But that's a business conversation. So you do your numbers, and you see if it makes sense to pre-fund the telcos, so that the consumers won't be bothered, or the consumers pay for their sessions. It's all a business question when you look at the dynamics and the numbers.
Okay, I know that a lot is actually changing in the space, but since some of these candidates are beginning to come up with suggestions with training, I know this NSE on its own part has also been doing more of investment clinic. You've been engaging some retail investors, talking to them, but a lot of the participants in those sessions are more of the investors who already understand the markets. There are the folks out there who really don't know anything about stocks, perhaps because they got their fingers burns way back, and they haven't been able to return since then. In fact, at the mention of stocks, they just disappear. Are there new initiatives you're coming up with, apart from the ex-curtain initiative to bring back this folks?
Of course. Today we have a retail investor coverage department in the exchange, which is focused on enlightening, education, mass mobilization, and things like that. So we have a lot of programs going on. NYC, students in the university, a lot of educational programs, and the way we are rolling out these things is leveraging fintech platforms, all right, to reach them and to educate them about stocks and how they can participate.
Well, that is on the program tonight. Thank you for watching. I'm Edidiong Iwang.